Boy, is it ever hot in the sauna? Oh God, I don't know what I'm gonna do. Oh, it's so hot. Ah! Welcome back, everybody, to Markonomics 101 presents Hoot Loot, the place to be informed, be amused, but never be misled. You gotta wonder why I'm wearing this stupid contraption. Well, as it turns out, I am in the heart of mental illness. It's called cable news. And I'm going to show you, I built this mask specially to withstand cable news. See, I can look all back there, all that false information, nothing happens. I had to today because I had to listen to Jay Powell give his fake news about the economy, so I needed some protection just in case I went crazy. All right, so let's take these off. And today's show is going to be really educational. It's going to be called The Art of Charting. Instead of the science of charting, the art of charting. We're going to take the other side to it. A little bit has happened in the markets, and we'll talk about that too, but the charts always have a lot to say if you know how to listen. So if you please subscribe right up here. And we would love to see you come back week after week after week after week. Before you know it, you'll be an expert, and we will be right back with the charts. Well, welcome back, everybody. This is April 28th, 2021. The market continues to churn around, chug around, and do its thing. Fortunately, when I'm not, as long as I'm not facing cable news, I don't go mentally ill, although who knows, maybe it penetrates you from the behind. I don't know. Anyway, this is Bitcoin. We talked about this chart last week and how it had broken an ascending wedge. Well, it sure as hell has. It's made a low beneath a low and a high beneath a high. That's what defines a downtrend. What defines any kind of trend is the pattern of highs and lows, okay? So the very basics are this: highs above highs, lows above lows, uptrend. Lows below lows, highs below highs, you have a downtrend. Highs lower than the previous high, in other words, forming a peak like this, that's a triangle. Lower highs, higher lows, and then the other way is a megaphone or a reverse wave. That's called higher highs and higher lows. So those are kind of the basics on how we look at charts. And Bitcoin broke out from what's called an ascending wedge. We've talked about that in the last few weeks. An ascending wedge is usually a sign of exhaustion or complete euphoria. And gee, don't we have euphoria with Bitcoin? It's worth $1 million. It's worth $1 billion. It's worth $1 trillion. It's worth so much. Do you know nobody spends money on Bitcoin? This is the funny thing. When people talk about it being a currency, it's hilarious. Overstock.com, which is one of the biggest fans of Bitcoin you could ever imagine, they've taken it for since 2014. Do you know what the number of sales are that they get from Bitcoin sales? Less than 1%, according to the CEO. And yes, I did have to watch cable news for that. And thank God I had my glasses and my goggles. So let's start with the Dow. The Dow, I'm starting off with a 2-hour chart. And the reason for that is because it magnifies the ascending wedge quite a bit. And you can see that it's gone from an ascending wedge into sort of a sideways pattern. And the sideways pattern, is pretty tight, looks pretty high. So we really can't make a call yet, but we do think it's broken the ascending wedge. And so now it's just kind of consolidating at the top. One of the other things that's going on, and we'll talk about that too, is the importance of earnings, or lack of the importance of earnings. Everybody's reporting this week. A bunch of companies did today. Facebook did today. We'll see some of the evidence of what the earnings reports are. This is the Dow for the last year. What you can see here is an ascending wedge, the small one, in the ascending wedge, the big one. So not only has it accelerated, it's accelerated twice, and usually that's kind of at the very end stages. It'd be very hard to accelerate any more than this. This is worth so much money. How do you get enough money in there to actually push it higher? That's the question. Nasdaq 100, same thing for this again is a 2-hour chart. And this is showing how this thing is kind of topping here, right around the area it topped before. When things tend to top or cluster at certain price points, like Nasdaq is doing here, we'll see in some other charts, those form what are called resistance and support areas. Now, why? I'll tell you in just a minute, because Amazon will illustrate that really well. The small cap index also looks like it may or may not be curling over. It has been very strong, up 100% year over year, which is outrageous. But it looked like it was forming a rounding top. It could still be. We don't know yet. It also could be breaking out. We still don't know yet. This is the thing. This is where the art comes in. We don't have to do anything, so there's no requirement for us to actually take action, but the art is interpreting what something like this that's in a gray zone means. We don't act on it. We act on it when it leaves the gray zone, but in general, there's still even an art to that as to when it leaves the gray zone. So, you can't take you can't make everything quantitative in charting or anything else. There still has to be some human judgment, and that's why, trades fail. Basically my fault or Ace's fault if I can blame him. The CRB index of commodities is really important, not so much because of the chart, although this is a very typical kind of chart, sort of a burst up, a sideways consolidation, another burst up, another sideways consolidation. But what's most important of this one is that inflation and interest rates drive everything. And if this basket of commodities, which is very old and very well respected, has gone up 100% in a year, something bad is coming, and that's why we've continued to follow it. The Invesco Agricultural Fund, this is about food prices, and we sure know those aren't going up. McDonald's, Coca-Cola, Procter & Gamble, Kimberly-Clark. So McDonald's for when you put it in, and Kimberly-Clark for when it comes out. They're apparently very upset about having to raise prices for toilet paper. So am I, for that matter, because you know how toilet paper is. The minute anybody breathes shortage, it's gone completely from the shelves. So we don't want that to happen. The base metals fund, these are basically construction materials. So, these are going to enjoy a very, very good day making crowbar and everything else that the infrastructure build out is going to entail. So, at least if you're not a racist highway, if you're a racist highway, you don't get any of this. If you're a non-racist highway, you get rebuilt. Now, to understand what makes a highway racist, we're going to have to ask Pete Buttigieg to show up here one time on the show and actually explain that to us, because I'm still a little fuzzy on that, but who knows. Crude oil also is kind of in a zone where, I've made mention to this in the last few weeks that crude oil can either go up or down from here. Now, from a chart standpoint, very similar, a burst up, stair step, burst up, a little bit of a consolidation, and now we look like we're bursting up. Normally, crude oil, like any other thing that's produced, has a price at which it can be produced, and that's roughly $60 to clear the market. The problem is with the dollar getting hammered, and we're going to talk about that imminently. It may not be $60 anymore, maybe $80, maybe $90, who knows? So right now we're completely in the dark, and that's one of the bad things about inflation. Inflation creates a problem with understanding prices. When you buy something, you're going through this calculation in your head. Do I buy 10 of these today, knowing that they're going to go up tomorrow? Or do I buy one today? Or what? Do I have the room? And that's how you end up getting shortages and stuff like that over price controls, because people start hoarding, making the price controls even worse. And that happened in the 1970s. When I was still alive, I was actually quite old by then, since I'm as old as the hills. But in the 1970s, you had gas lines, and the gas lines were part of the shortage because the prices were controlled. So you ended up having even a bigger shortage because people hoarded gasoline because they couldn't get gasoline when they needed it. And that's one of the dynamics that goes on when you price things underneath the market, like interest rates, for example. You can ruin an economy doing that. Wonder who I'm talking to. Well, I don't know, Jay. I don't know who I'm talking to, but let's keep going. U.S. dollar, speaking of Jay Powell, the U.S. dollar is not looking good. Now, there was some attempt, maybe there were too many short sellers, I don't know. But if you look at this, again, the chart, there's so many dollars out there. They're talking about yet another stimulus. They're talking about a stimulus for life. Geez, why don't we just have an economy that's based on printing dollars? In that case, we'd be rich as all hell, because God knows I can't get enough dollars. I can eat them. I can sleep on them. I mean, they are so valuable to have around. I'll tell you that. Copper miners, again, this goes into everything. These are the companies that are, there's another leg coming up in copper is what it looks like. And this is basic to inflation. Housing prices are going through the roof. And it's not because people are so rich. It's basically because interest rates are so low and the cost of building a house has now become so high. The hoarding effect is going into play. That's a little bit of the economist here talking, but when you have things that are in short supply, the human tendency is to hoard, and therefore you create a bigger short supply. One reason never to have price controls, as if someone were listening. Palladium. Big metal, this one has surpassed gold. This thing is going through the moon. We've talked about it before. This is a 20-year chart of gold. I am just, again, continually shocked by gold. But what the chart says here, it doesn't look good. That could be a bull flag, but it also could be just a bear market. It's already gone down 20% from its high, 2100 to below 17. If it breaks 17, I think this thing could go all the way down to 1300. That would be the same type of move, 21 to 17, as now from 17 to 13. The moves are about roughly equivalent, rule of thumb. And so you might see gold as low as 1300. I don't know why. I don't believe it. I have a hard time believing it, but I'll stay away from it for the time being. Silver, on the other hand, has gone through a sideways pattern. That tends to tell you that sideways like this and bulky like this is really meaningful. Why is it meaningful? Because everyone who's bought and sold is going to either be underwater or at a profit, depending on which way it breaks. So if silver breaks down, okay, it goes below that bottom trend line at bottom resistance line at 22, that means that everybody in the last like 9 months is underwater. Okay, now if it breaks above 30, everybody that's is going to be at a profit. And what you see is that when people that are lost, they tend to chase it all the way down, and when they're at the profit, they chase it all the way up. That's how you end up getting bubbles. 10-year treasuries are kind of in a sideways consolidation pattern. We've talked about these before. Now, what's important here with treasury yields is that they haven't broken down. Now, we talked last time about them holding a certain level. I believe it was about 1.85 or 1.65, 1.55. I'm sorry. They have held that level. They look like they're coming back up. The Fed talked today, or should I say Jay Powell talked today, and of course he sees no inflation at all. None what to be found. As Sergeant Schultz would say on Hogan's Heroes, this is the Sergeant Schultz defense. Jawohl, I see nothing, I know nothing. That's basically Jay Powell for you. He sees nothing, he knows nothing. But I'll tell you this, if he lives somewhere, he sees price inflation go up. That is, if he pays for it. If he eats food, he's got to see food inflation go up. If he drives somewhere, he's got to see the cost of energy go up. But I guess he does none of those things. So who knows? He's always being yelled at by Janet Yellen. Who knows? 30-year treasury, same thing, a downward flag. This actually gives me more confidence that we're going to see a nice big up move in the very, very near future. They often occur after Fed meetings like today and the press conference, and markets tend to move with the trend. So even if 30 years go up tomorrow and they go up, say, some huge amount, or they start on a new up leg, it'll be blamed on Jay Powell because of the timing. It won't necessarily be because of Jay Powell. It'll be blamed on Jay Powell. The news always moves with the trend. So if they would break down, it'd be attributed to Jay Powell. If it goes up, it's attributed to Jay Powell. I'm telling you, it's probably neither. He hasn't been chairman long enough to really have affected this. Although all the stimulus checks, I don't know how much I blame him versus some of his compatriots. They're the ones that are really behind it. This is Apple again, and we want to go to the mega caps. Apple again, bear flag. They just announced earnings today. Okay, that was a big deal because their earnings were up 50% year over year. Now, how does a company worth $2.2 trillion actually have its earnings go up by 50% in a year? Well, let's see. Maybe because you're a monopolist and you've had help destroying all your competition? Maybe that has something to do with it. Well, I don't know, but it was already built into the price because the price, the last I saw on cable, cable news. My shrink says I need to do this every time I mention those two words simultaneously. Okay. So they were talking about how Apple is going to blow out the earnings and all that kind of stuff. It did. It was only up $1 after the close. So investors had already priced it in, and I would be willing to bet that it's down tomorrow. We'll see, we'll see. But it just did not act strong enough. Facebook, on the other hand, we'll talk about that in a minute, had a different reaction. Amazon is supposed to report tomorrow. This should be very interesting. Look at that. 9 months of straight sideways action. That's what I mean by everybody's going to be underwater or at a profit, depending on which way it goes. I'm still willing to bet these are going to go down, finally, and to the end of it. But, a lot of them are going up on the news. So we'll see. I don't want to say 100% of anything, but on the other hand, it's pretty hard to satisfy a market or beat expectations when the expectations are already like that high. It's impossible. If you have low expectations, yeah, they can be beat. High expectations, really tough. There's only room for disappointment. And here's Amgen. Here's one that didn't beat expectations. Look at that. This thing dropped like 30 or 40 points. It's a Dow component, a big Nasdaq 100 company, but this is what happens. You get circles like that. Facebook beat and beat handily, did really well. I'm chagrined to have to say this, but that's again, helps to be a monopoly. That's for damn sure. It went up almost 20 points after the close. So you're not even seeing the after the close trading up another 20. Facebook will now be worth $1 trillion. That makes it the third, I think, to be worth $1 trillion. Unbelievable. Or the fourth. Google's number 4. Perfect pattern. Again, Google's expected to have great earnings, or doing really well, hitting on all 4 cylinders. All 1,000 of the companies they own are doing well, apparently. Not one single one of their companies not growing at 50%. So here you have a company that has incredible market cap, still can grow at 50%. Go figure. Well, yeah, get rid of competition. That kind of helps. Microsoft, same thing. Notice how, though, it actually went down on great news. That tells you something. That tells you that investors psychologically, they've already priced it in their heads. They're already thinking Microsoft's going to earn X amount of money. I'm going to buy it now in anticipation of it, and then I'll sell on the earnings report. This would have been a terrible strategy in this case. Now, what makes this is the best analogy I can give you. When you bet on football, and everybody's bet on football, except me, I would never do something like that. But for those people who have a gambling problem and who do bet on football all the time, I'll take the Bills in 5, please. You have to beat the spread. Okay, beating the spread means you don't pick the winner, the loser. You beat the amount they win or lose by. That's called beating or not beating the spread. Similar in stocks. The difference in stocks is that you don't even know the spread. So with Microsoft, they could have beaten earnings by 50%, and the spread could have been 75. You would never have known, and you'd end up with a bad trade. Even maybe it was a good decision, but maybe it ended up with poor results. So that's an important thing to mention, is it's called beating the spread, and you can't do it easily in stocks because you don't know what it is. The bank index looks like it's actually breaking out to new highs. Call me surprised. At least that's the best name you could call me for this one. I can think of a lot worse. But these are all looking pretty good. They haven't yet quite all broken out, but some have. It's really amazing. One that has, American Express. We've talked about this one. Credit cards, big financial company. Can't go wrong here. I mean, you can't argue with that unless it's a false breakout. Caterpillar Tractor. Now, this is an interesting one. This is one where it's going to benefit from all the infrastructure. Okay, Caterpillar makes those, all those little haulers and, dump trucks and things like that, and things that, move, ground movers. Well, Caterpillar has broken out. It looks broken down from what is an ascending wedge, and it's gone up all year long. Investors have been piling into this since, for a year, thinking an infrastructure bill was bound to happen, and they were right. So this is Caterpillar for you, but it's now breaking down just as the news is occurring. That's the key thing. When you kind of suspect something's going to happen, that's a time to buy. When it's already happened, that's a time to sell. They always run up on the anticipation and they go down on the news. And that's exactly what Caterpillar has done. It's a perfect example of how psychology is not, it has to be one step ahead to be of any value. Delta Airlines, also broken down. We've talked about that last week. Discover Financial, look at that, another breakout. Those stimulus checks just keep on coming and keep on coming. Are they telling us another 4th round is coming? That's what I'm starting to wonder in looking at some of these charts. Although Jay Powell made it sound today, here's the interesting thing. You have an economy with no inflation, still doesn't warrant an interest increase from 0 because it's too weak, but there's no inflation and it's running very strongly everywhere. Okay, I know, I understand. Je comprends. Oh, God. Okay, Disney, we showed that last week. Rounded top, it looks pretty good, like this actually is completed its pattern. Nike, $200 billion shoe company. Nah, I don't think so for very long. It's broken down out of a pretty good consolidation, and that even with good earnings. General Motors, we put it as neutral, but notice it's starting to also curl over, and the 2 blue lines that are horizontal are places where congestion is. Now, we call them resistance and support lines, but they're places where a lot of investors have gotten in or gotten out above or below, like those horizontal lines at Amazon that I said you have a lot of people underwater if it should break through it. Well, those are all part of a congestion or a place where a lot of trades have occurred, and that's why they're important lines to know, because then when they move above or below, how other investors have fared during this, and therefore can have some idea of what their behavior is likely to be. Intel, as we put that last week, is an ascending wedge and broke down just perfectly. Intel, as a matter of fact, they're talking about taking it out of the Dow now. So we'll talk about that, another time as to what goes in the Dow. That's something else. But Intel's coming out. 3M company, here's another one that broke down from an ascending wedge construction company, right on schedule, right as the bill is a finality, just about, it breaks down, but it runs up right up until the bill. And that's the other thing about psychology, charts, putting them together so you have a complete picture of what's likely to happen. All right, Netflix, we talked about last week, disappointed in earnings, but didn't break through the lower end of support. We'll see, but that is a very wide range. I don't know how the hell you make money in a range like that. The friction costs will kill you. Tesla, company I love to lampoon the most, but I won't lampoon it too much right now. It's going through exactly what you'd expect chart-wise. And the reason the reason I like to bring it up, I call it the canary in the coal mine as I do Bitcoin, is that this one tends to lead the market. Even if 9 out of 10 of big Nasdaq companies look favorable, Tesla doesn't. I don't know. I might pick Tesla. Tesla was down today. Tesla, it looks like it's starting to break down. So, I'd be very cautious just on the Tesla factor alone. I know the Chinese right now are kind of going, wait a minute, it's kind of polluted in this country. Is that because we built your batteries? Yeah, they're kind of catching on. Target has a nice burst up, call it stimulus checks, but it's curling over. And what that tells me is that the boost from the stimulus is about to end. So they're going to have to come up with new ones and more ones to do any good. Jay Powell, he just loves it. Yeah, I'll keep printing. I'll keep buying securities. You just keep sending them out. 120 billion a month they're buying in U.S. securities because we cannot lend to anyone. We cannot lend that amount of money when you're running a huge budget deficit. But United Airlines, another one that doesn't look too good to me, and it's in a big rounded top. Okay, so we're back with UPS, and once again, this one is one I got to tilt toward having a favorable effect, or looking like the economy's having a favorable effect, is that the company that transports so many things is doing well. That tends to tell me that the stimulus is working its way through the economy, is working its way well, although maybe it's anticipating a fourth one, who knows? Well, in any event, I hope you got something out of today. We decided to call today the art of charting, simply so you'd understand how much gray area there is, and there's a lot of gray area, and to get some of the idea of how intuitively one separates the gray area into more of a possible decision. And a lot of these we could, and a lot of these we could not. So in any event, love to see you back. We'll be back on Saturday for a full wrap up. Please like and subscribe, and can't wait to see you guys back soon.